Hi, welcome to this on-demand webinar, The Data Behind the Dollars, Understanding Your Sales Tax. This is meant to be a practical guide for municipal and ESD finance directors and managers, covering the fundamentals of Texas sales tax, how to read and leverage available data, and how to build a more accurate, defensible budget forecast. I'm your host, John Granberry, Operations Manager for HDL Companies in Texas, and I've been working with local governments for over 15 years, helping them to better understand their sales tax and what makes it up. Today's presentation will be broken into three separate categories. We'll start with understanding your sales tax, where we'll go over some sales tax 101, some terminology, and understand some basic concepts that will drive some later topics. Then we'll dive into the data. We'll start with public data, and then we'll talk about the details available in confidential data and how to use those to your advantage. And then we'll talk about planning like a pro, assessing sustainability versus vulnerability, and how to build a forecast that's grounded in a sustainable sales tax baseline. So concept number one in understanding your sales tax. In Texas, there are two types of filers, meaning two types of ways that taxpayers will file their local sales tax. The first is an outlet filer. Outlet filers are responsible for paying sales tax based on where their business is located. The opposite of that is a list filer. List filers are responsible for paying tax based on where they deliver items, where their customers are located, or where the job site that they're working on may be located. These are fundamental concepts in understanding everything about Texas sales tax as we go forward. Let's talk a little about what a business does to participate in the sales tax world in Texas. So first, they'll have to file for a sales tax permit with the state comptroller's office. At that point, they would begin conducting business and collecting tax on any taxable transactions. After the tax has been collected in that month, it would be due to be reported to the comptroller on the 20th of the following month. Then the comptroller takes all that data in, processes it, and allocates back out the payments to the local jurisdictions across the state. One of the most important terms in Texas sales tax is a place of business. This is a very lengthy and messy definition if you look in the tax code, so we've tried to break it down into some core concepts here. A place of business in Texas is an established physical outlet, so it must be an actual location operated for the purpose of selling taxable items. A virtual presence does not constitute a place of business, so when things are purchased over a website or an internet order or an application, those are not considered a place of business. The rule states you must receive at least 3 orders in a calendar year to maintain this qualification as a place of business. Let's talk about some examples. So some of the obvious examples of a place of business are in this top left category, yes, here. We're talking about retail stores, restaurants, other places where you go and conduct a taxable transaction. The customer enters, they pay for an item, and they leave with an item. Those are absolutely qualifying places of business. Then let's jump to the bottom right-hand corner. Websites, like I mentioned earlier, virtual presence is not a qualifying place of business. So if that location only receives orders through a website, that's not going to qualify it in Texas. Those are the easy ones. Everything else is going to fall into one of these other categories of maybe. So as we move through the presentation, we'll talk about some of the nuances that may cause a distribution center or a manufacturing facility to actually report sales tax based on their location. But it's a maybe, and it depends on their operational model. Same can be true for home offices and in other unique situations. So the point here is that there is always nuance involved in understanding what is a place of business as it applies from the Texas tax code. Summarizing this again, and we're driving this point home because it is so important. These two conditions must be met. The location must be operated for the purpose of selling taxable items. Important to remember that this includes both taxable goods and services. Generally speaking, a good rule of thumb is that sales personnel is usually required. The other condition is, like I mentioned a minute ago, this location must receive 3 or more orders per year for these taxable items. And again, just one last reminder here, online orders are not considered received at a place of business in Texas. So now that we've talked about what a place of business is, let's talk about how that relates to where local sales tax is due. We're going to work through this graphic from bottom to top to help understand how we ask the right questions to determine where local sales tax will be due on the sale of a taxable good or service. The first question we're going to ask is, was that order received at a Texas place of business? If the answer is yes, then we proceed to the second question up, which is, was that order placed in person? If the answer is again yes, then we're going to see that tax being due at the place of business where the order was received or placed in person. Pretty simple transaction. Again, we're talking about retail or restaurants, other things like that. But if those answers are not yes, we have to keep working our way through this graphic. So let's go back and say this order was not received at a Texas place of business, or perhaps it was, but it was not placed in person. Then we have to go up to the next question, which is, where was that order fulfilled? And was that fulfillment location actually a different place of business? If the answer to that question is yes, then that tax may be due at the location where the order was fulfilled, not received. If we continue working our way through this graph and we're answering no, 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 then we're going to get to the final question here, which is, where was that order shipped to? And that's the other possible destination for sales tax here. So at the end of the day, we're looking at three common locations for where sales tax can be due in Texas. It's going to be a place of business where the order was received, potentially a place of business where the order was fulfilled, or finally, the third option is the ship to location or the customer address where that order was delivered. So enough about the sales tax 101. Let's get into the data. We're going to step through several different phases of data here. We're going to start by understanding what is available, what's available publicly, what's available confidentially. We'll look at that public data and we'll learn how to review it and see trends over time. But then where we really want to spend a lot of time is talking about what's available when you access and use the confidential data. That's when we really start to be able to get into the granular taxpayer level detail and identifying trends and patterns so that ultimately we can come back and assess sustainability and vulnerability so that we get into a comfortable budget position. What reports are available to you as a local jurisdiction in Texas? Well, there is quite a bit of public information out there. So we'll look here in a moment at public sales tax allocation details, what those look like. Other sources of data that are meaningful for local jurisdictions include new permit holder lists. So you can choose to be on a distribution list from the comptroller where you'll get information about all the new permits that have registered in and around your city or ESD in the last month. Sales tax area reports are another publicly available tool to look at specific groups of businesses and how much sales tax they're generating for a specific local jurisdiction. This is considered publicly available data because that data is aggregated. So you must provide a list of businesses and you will get back an aggregate total as opposed to a taxpayer level detail. And then finally, we'll spend time talking about the confidential information reports, which is the only way for a local jurisdiction to get to that taxpayer level detail to really see which businesses specifically are driving their sales tax base. First, we'll look here at the public detail when it comes to the sales tax allocation payments. So each month, every local jurisdiction in Texas receives a net payment from the comptroller on their sales tax. That's the bottom line here on the screen. That's the number that everyone recognizes because that's the number that hits the bank account. But even at the public level, there's some deeper dive information available to you here that can help to see what is making up that net payment. So laid out on the screen here, you can see the different formulas for where each of these totals are coming from. But generally speaking, we're thinking of sales tax broken into current period collections, prior period collections, future period collections. Then we also have the audits, unidentified collections, and finally the single local tax rate collections. So all of those things are getting summed together, and then the comptroller applies their service fee, and then you finally get your net payment there, which is what the jurisdiction will actually receive each month. We can use that publicly available data to review historical trends. So we can start to track that data. You know, if you're a spreadsheet person or a Google Sheets, you can use that data to put together some nice graphs to look over time and see, how is your sales tax trending? Are we going up? Are we going down? Do we have some seasonal patterns? Are there some months that, hey, we're not really certain why, but the sales tax just jumped way up or way down one month and then it went back to normal? Well, those are some of the anomalies that we can identify even at the public level if we know how to look at those monthly data details. Here's an example of a place where we can absolutely identify an anomaly right off the bat in a publicly available detail table. Some of the things that are commonly seen here are things like audit collections or one-time payments of prior periods. And we can identify in this example, the net payment for this jurisdiction for this month was $3.3 million. However, if we look up further in the graphic, you can see that only $2 million of that was current period collections. A couple lines down, you'll see that they received $1.2 million. Over 30% of their payment for this month came from an audit collections. Those are things that are not going to repeat. We can immediately identify by looking at the public detail here that our jurisdiction has received an amount that we should not be relying on when we go to budget again next year. Now let's dive a little bit deeper. So I've mentioned confidential data several times. Why do we want confidential data? Well, we want to be able to see what's really grinding the gears behind our sales tax, right? In this example, we know a lot of folks like to look at industry segments. These are NAICS code-based categories, and one of the common ways to track your progress as a jurisdiction is to see the 12-month rolling averages of your industry segments. So in this example, this is tied to the previous page that we saw with that audit collection. We can see by working our way through this data that right there on the fifth line in mining oil and gas is a $1 million year-over-year variance in their mining oil and gas collections for this month. So we can highlight right away that that audit collection that we saw on the public level, we can pinpoint it now down further to the mining oil and gas industry. So again, this is the information that becomes available to you when you do have your confidential data. So let's keep going and look at some other ways that we can analyze data with the confidential level detail. A couple of my favorite questions on these next couple slides. I love to ask folks if they have any idea how much of their sales tax base is coming from taxpayers located inside their city or their ESD versus outside. That's a tough question to answer, and one that you can't answer unless you do have the confidential level detail. On this slide, you can see 3 examples of cities, grouped generally by the size of their annual collections, and how those amounts are broken up between taxpayers located inside the city versus outside the city. So as you can see on the screen, and as is most common, the smaller the city, the more likely you are to have a higher percentage of collections coming from taxpayers located outside of your city. And that's a trend that we see pretty commonly across ESDs and cities across the state. But not always, because everyone has exceptions. And so as we look into the next slide here, we're going to see that City B, even though they're getting quite a bit of money, there might be more to the story here. So my other favorite question to ask local jurisdictions as I give these presentations is, do you know who your number one taxpayer is? And most people do, and that's great. However, I would then ask, do you know how much of your total sales tax is coming from your number one taxpayer? And that's a question that most people don't know the answer to, again, because it requires this confidential level detail. Here we have the same 3 cities looking at their collections a different way. So now let's look again at City B here. This is a $32 million a year city, roughly. For these folks, 37.1% of their total collections are coming from that one single taxpayer. That's astronomical, right? And we better hope that that taxpayer is happy. And we can only identify who that taxpayer is using this data. So that's one way that we can identify things here that are going to help us down the road, whether it's through some economic development conversations or just relationship building to say, hey, this taxpayer, we know it's number one, but it's very significant. Should we lose the revenue from this taxpayer, our city would look entirely different from a financial standpoint. So again, having this data, being able to get down to this granular detail is going to allow you to do this analysis to see where your revenue is coming from. We looked earlier at industry segments. Industry segments are based, like I said, on NAICS codes. NAICS codes are great, but they're also self-chosen. So when a business files for their sales tax permit, they get to select what their NAICS code is. And as you might imagine, a lot of folks don't get it right. And so at HDL, what we've done is we've taken that NAICS code base And we've massaged it into what we call HDL business groups. We think this gives us a much better sense of where your revenue is coming from. We've also grouped together like industries that trend the same way. So this is not only great for analyzing historical data, we also use this strategy as we look to forecast forward. As we look at the profiles of these same three cities we're continuing to analyze, we can see how their collections vary by business group in the different scenarios. So statewide, construction and manufacturing accounts for somewhere between 25 and 30% of revenue on average per jurisdiction. You can see that City B, again, that single number one taxpayer, represent 30%, 7% of their collections. They're going to live right there in that construction manufacturing category, right? We see that impact right away, that over 50% of City B's collections are coming from that one business group. As we look at a couple of our other cities here, we see some more normalized trends, but also some key characteristics that do stand out. For example, we can see City C, very small city, right? $1.5 million in annual collections, but 17% of that revenue is coming from restaurants. So that may mean that they have several restaurants in their city, or it may mean they have one restaurant that's contributing a very large amount to that sales tax base. Again, things that we like to get into and analyze on a case-by-case level with the jurisdiction, and we can only be done with the confidential data. The last question is here really, how deep do you want to go, right? We've looked at some ways that we kind of analyze data by a standard across different local jurisdictions in Texas, but you can go as deep as you want to. With this data, we're able to take things and put them visually onto a map. We can start to chart trends geographically, and we can also use this data to execute special projects. Perhaps you're focused on analyzing the revenue out of a specific zone in your district, or maybe a TERS in your city. Those are things that can be done only with the confidential level detail. So the question, again, not what can't we do, but how deep do you want to go with this data? Now that we've talked a little about Sales Tax 101 and got an understanding there, and we've talked about the data available to us, how do we piece those two things together to start to assess what we call sustainability versus vulnerability? Pretty self-explanatory terms. They mean what you think they would mean. Sustainable sales tax revenue is revenue that we expect to repeat again next year. You got it this year, and we expect that you'll get it and maybe a little bit more of it next year, right? Vulnerable revenue, on the other hand, is tax that we do not expect to repeat again next year. It doesn't mean that it wasn't yours. It just means that it was likely one time in nature. Maybe it was one of those audits like we mentioned earlier. Perhaps it was a one-time project. So those are some of the things that we'll look to categorize in that vulnerable revenue category. That way, we're not including those as we go to forecast our sales tax revenues next year. So how do we determine what's sustainable and what's not? Well, the first question we like to ask is perhaps the obvious one. Does this business have a location in your city or your ESD? If they do, we're likely trending towards the sustainable side here, right? But there's more questions to be asked. Does this business sell taxable goods or services? And how are those specific goods or services taxed? Because there are certain examples of goods and services that are not taxable based on the place of business, right? So we need to understand not just that the business is located there, but how does the local tax apply to the services that they provide? Second, does their business model require that they stay in the same place? And what we're really looking to drive home there is we need to understand how possible it is that this business packs up and moves down the road to the neighboring city or ESD. Some businesses are very much tied to their location. Perhaps they have good highway frontage or a solid location rooted in the community where people know how to go find them. But other businesses are more relationship based with their customers. And if they were to pick up their operation and move 5 or 8 miles down the road, their customers are likely going to follow them. And so those are people that we want to make sure we're identifying and then working with to make sure we have leverage over whether or not they're going to stay in our city. And the last point there is looking for these kind of boom and bust cycle industries. A good example of this is the recent boom we've seen in lumber pricing, right? As we came out of COVID and in those next couple of years, lumber prices went through the roof. And as you may expect, because of that, the sales tax coming in from lumber companies went through the roof. But we knew that that was not a sustainable pattern, right? Lumber was not going to keep going up in price and demand was not going to keep increasing forever. So we were able to help our clients understand that while you may be receiving a short-term spike from your lumber company, that's not going to likely be repeated as we move forward and things start to normalize back out. As we move to the right-hand side of this screen, we're starting to ask questions of businesses that are not located in the city. And the biggest thing that we want to touch on there is this idea of residence-based sales tax. Residence-based sales tax is a term we've created here at HDL to really capture all the different sales tax coming in based on the population living in your city or your ESD. These are services like subscription services, streaming, electric utility services, waste collection services. All these are examples of services taxable based on where the customer lives or where the service is being delivered. And those are all directly tied to a stable population base in your city or ESD. And those are the types of out of jurisdiction businesses or outside of city limit businesses that we expect to be sustainable, right? As long as that population base doesn't change dramatically, we don't expect that sales tax base to change either. When we're looking at other businesses that don't have locations in the city, though, things get a little more murky, right? We're oftentimes looking at things like single transactions or short-term projects, right? Construction projects can sometimes be generators of sales tax. But again, those projects aren't going to repeat year over year as we go into the future. So identifying them and moving them out of your baseline is always a safe bet. So how do we put all this together? Well, this is our little matrix here. As you see, we talk about what types of examples we're looking for within city businesses being sustainable versus vulnerable, and then outside of city businesses being sustainable versus vulnerable. At the end of the day, again, what you want to do to the best of your ability is take your sales tax base, go through it at a taxpayer level, and start to group these businesses into these different categories. Because the next thing we're going to cover and the last thing we'll cover today is how we tie all this together into a budget for that time of year when it comes time to look at our sales tax receipts for this fiscal year and forecast out what we're going to receive next year. So how do we put it all together for that sustainable budget? Well, we start from the top. We start with the historical data. We look at the trends year over year. That can be done at the public level, or that can be done at the confidential level with enough history. Then we start to analyze that data. We look through it at a taxpayer-specific level, and we look for those anomalies that we don't expect to repeat. We're able to identify those patterns and trends of those businesses that we do expect to potentially grow, or maybe we know about incoming new businesses that are opening in our area. And then we start to separate our base out into those sustainable and vulnerable categories. At the end of the day, what you want to be able to do is go back and tell your higher ups or your city council or your ESD board that this is how much sales tax revenue we expect to receive next year, and here's why. And that's the goal of this presentation, is to give you the information that you need to go out, get your data, and come to a meaningful understanding of your sales tax so that you can budget sales tax like a pro. Thank you for your time. I hope you learned something today, and feel free to reach out to us to learn more about the services we might be able to help you with in Texas.